Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about 3SBio Inc. Annual Report. 3SBio Inc., a biopharmaceutical company based in mainland China, offers a diverse range of products and services across various therapeutic areas. The company provides recombinant human thrombopoietin, TPIEO, for treating blood disorders, as well as anti-ARTWO monoclonal antibodies, Cipterbin, for breast cancer treatment. In addition to its pharmaceutical products, 3SBio Inc. offers a variety of other services and products, including receptor fusion tumor necrosis factor inhibitors, YISIPU, erythropoietin injections, EPIEO and SCPO, and low molecular weight heparin calcium, SBARIN. The company also provides treatments for hair loss, such as minoxidil foam formulations, MN709, and orally disintegrating tablets, REMICH. Beyond its pharmaceutical offerings, 3SBio Inc. engages in various business activities, including trading, research and development of biotechnology and drugs, sales of chemical products, retail of pharmaceuticals, project management and consultation, technology services, sports services, financial services, clinic services, investment advisory services, agricultural services, and manufacturing of medical devices. 3SBio Inc. maintains a market capitalization of $53 billion, broadly in line with the industry peer group. 3SBio Inc. trades at a lower price-to-earnings ratio of 21 times and a lower price-to-book ratio of 1.79 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The balance sheet appears very conservative, with liabilities representing only 26% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted, reflecting the dynamic nature of the biopharmaceutical market. On the growth side, mainland China has emerged as a significant contributor, with sales increasing by 10.3%. The sale of biopharmaceuticals and licensing revenue have also played a crucial role in driving growth. Market share expansion through internal R&D and external partnerships has further boosted revenue. The company's dominant position in the mainland China hair loss drug market with Mandi has been a key factor, as well as the expansion of therapeutic coverage through strategic partnerships. The upfront payment of $250 million and potential payments totaling up to $4,800 million have also contributed significantly to growth. Additionally, the enhanced market position for TPIEO due to safety and efficacy, along with the completion of multi-center biosimilar clinical trials for EPIEO, have driven revenue expansion. On the decline side, a significant drop in revenue from the USA has been observed, with a decline of 99.9%. Price reductions from volume-based procurement and the impact of healthcare insurance policies on biopharmaceutical sales have also contributed to the decline. Furthermore, a decrease in contract development and manufacturing operation business revenue by 46.4% has added to the decline. Overall, the growth drivers are largely driven by mainland China's market expansion, while the decline is primarily attributed to the USA market's significant drop in revenue. The company's net income saw a significant surge, increasing by RMB 14,910.8 million or 413.6%, resulting in a total net income of RMB 19,393 million. This substantial growth can be attributed to various factors that positively impacted the company's profit margins. One key contributor to this increase was the improvement in gross profit margin, which rose from 86% to 92.4%. Additionally, EBITDA adjusted for non-operating items saw a notable increase of 224.4%, indicating enhanced operational efficiency and profitability. Furthermore, administrative expenses as a percentage of revenue decreased from 5.5% to 3.7%, while selling and distribution expenses as a percentage of revenue dropped from 36.8% to 20.5%. These reductions in costs have likely played a crucial role in boosting the company's net income and profit margins. The company's financial performance has shown significant improvement in terms of operating cash flow. A comparison with the previous year reveals a substantial increase in net cash inflow from operating activities. Specifically, the reporting period saw an operating cash inflow of RMB 9,668.9 million, which is a notable rise from the RMB 3,201.3 million recorded in the preceding year. This upward trend indicates that the company is generating positive operating cash flow, a crucial indicator of financial health and stability. The company's debt level has undergone significant fluctuations over time. Initially, it decreased from RMB 2,243,750 to RMB 1,830,588 on page 5. However, this trend is contradicted by the data on page 17, which shows a decrease from RMB 3,507,476 to RMB 2,553,865. Nevertheless, the most recent data on page 38 reveals a substantial increase in debt level, reaching RMB 2,553.9 million in 2025 compared to RMB 2,281.4 million in 2024. In contrast, the company's interest expenses have decreased significantly from RMB 190,846 to RMB 76,385 on page 11. This reduction suggests that the company has managed to lower its financial burden through effective debt management or other means. However, the conflicting information regarding the debt level change highlights the need for further clarification and analysis of the company's financial situation. Management is optimistic about the company's future prospects, citing several key factors. Firstly, the breakthrough therapy designation for the 707 injection has provided a positive development outlook, indicating significant potential for growth. Additionally, the company plans to focus on therapeutic areas with substantial patient needs, such as oncology and autoimmune diseases, where there is a high demand for innovative treatments. The company also intends to utilize its resources effectively by leveraging capital and human resources to explore new targets and develop drugs. This strategic approach is expected to drive growth and increase profitability. Furthermore, management is confident in the company's financial performance, with a strong increase in net profit attributable to owners of the parent. The company has also assessed the potential risks associated with renminbi exchange rate fluctuations and believes that there will be no material adverse effect on its operations. Overall, these statements suggest a positive outlook for the company, driven by strategic focus and effective resource management. The company's financial performance and shareholder returns have been a key focus area in recent years. One notable aspect of this is the payment of dividends to shareholders. According to the provided information, the company has indeed paid dividends. A specific example of this can be seen on page 13, where it is stated that the proposed final dividend for 2024 was HKD 25 cents per share. This indicates a clear commitment by the company to return value to its shareholders through dividend payments. That concludes the financial summary for 3SBio Inc. Feel free to comment below, and I will be happy to answer them when possible.